What's up, everybody? Good morning. Welcome back to Blockchain channel. Live today, March 16th, 2018, coming to you from Washington, D.C. I'm going to go over the markets, what's been going on, and a little bit of the news, and get you started off right for the weekend coming up, and give you some ideas of things to look at and watch out for. So, not a lot of change in the last 24 hours in terms of total market cap. Dropped 4 billion in total market cap. Pretty much been trading sideways for the most part. And Bitcoin dominance continues to slide back up. And I'm not surprised. When Bitcoin drops like this in the past, we see alts get sold off even harder. And the next big question to ask yourself is, do you think, in the past, a lot of times when Bitcoin started to run, alts would continue to sell off because everybody wanted to buy as much Bitcoin as possible and get in on the Bitcoin run. And then once Bitcoin started to slow down, people would take some of those profits and put them into alts that had been beat down, and then the alts would run. And so that's what I anticipate happening, although there's been a lot of changes over the last year or so in terms of the way the market reacts to various scenarios. So we'll see what happens. Anyway, getting back to the charts, we are hovering right here, about 8,100, currently at 81.8795 at 9 a.m. here Eastern Time in DC. And as you can see, not a whole lot of movement the last couple days. Pretty tight range, open to close yesterday, and a little bit of a wick there, especially the lower wick on the candle, reached as low as 76.66. But really, really narrow range. Opened at 82.07, closed at 82.59. And today, the open was 82.60, and right now we're at 81.87. So not a whole lot, and we have a daily inside bar forming right now. Obviously, we have a long way to go on the day, but this sideways action is not very comforting for me personally in terms of being bullish. A lot of times, in the past, you'd get these massive flushes and you'd get a pretty quick rebound. And we didn't get that big flush that we were looking for the other day, as we talked about yesterday. And so we're not getting that big rebound. The buyers just don't seem to be here. If you look going back here, most of the volume since the peak has been selling. Most of the volume here is selling volume, and even when we're moving up, in these recoveries, the buying volume, the green volume is so low, and then you get these sell-offs and the volume spikes. So until the buyers really show up in force, I think we're going to continue to melt lower. And I don't know where the bottom is. I've identified on this chart a couple spots that that there's been recent levels that have been hit. That may offer some support. The 6905 number, I think, is a pretty good one, just because it's right under 7,000 psychological. So, I might start wading in at 7,000, but you never know. We could get back to 5,500, and then even down to as low as like 4,000, I think. But I think 4,000 is probably the floor. But that being said, you don't really want to wade in at 8,000. Even if you think that the future is bright, if I can buy 2 Bitcoin in a month from now, or 1 Bitcoin today, obviously my profits are going to be a lot higher if I can buy 2. So moving on, Lightning Labs launched the Lightning Beta yesterday, which is pretty exciting. I've been pretty negative on Bitcoin for a while now, and mainly it's been because the fees continued to go up. Less and less people were able to do transactions. Transactions had to be huge in order to make it worth even paying the fees. and confirmation times were excessive. And I'm a show me kind of person, so I didn't really believe in this. And to this point, I don't know that I still believe in it. We'll see. We'll see. But it is good seeing that progress is being made. There's something like 1,000 nodes now on Lightning, mainnet on Bitcoin mainnet, and there's the fact that they've raised $2.5 million from the likes of Jack Dorsey, um, and David Sachs of PayPal, and they have this type of backing, um, and Ben Davenport of BitGo. These are pretty big names, and not all really you know having made their money in blockchain and Bitcoin. So that's a good sign to me. And the idea here is you are solving the scaling issue in a way other than raising the block size. And I'm not going to get into that debate, but the bottom line is what we need for Bitcoin to succeed is instant transactions and ideally zero confirmations and low to no fees. And that's what Lightning is seeking to do. So we will see. But this is a good development for Bitcoin on a fundamental basis. And the fact that this launched yesterday and Bitcoin didn't move, that's another bearish sign to me. When you have a bear market and good news comes out and nothing happens, that's just a sign that the bulls just aren't there to buy. And when you have a bullish market and the same thing happens, it's a really bad sign for that as well. So we'll keep our eyes open for further developments in Lightning, but that's definitely a good move in the right direction as far as I'm concerned. And of course, another of the traditional financial people has weighed in here. Visa's CFO says that basically Bitcoin is only used for crime, and that people who talk about buying and selling and trading Bitcoin don't have a clue, and he's shocked by this. He is obviously very big on being able to, he believes the Federal Reserve stands behind his money, and he doesn't understand who stands behind Bitcoin. And whatever. That's a pretty antiquated way of looking at things. And when people like this, say things this sort of absurd to me, it makes me wonder whether they're lying to themselves, or they are just, or they're in denial, because I can't imagine this guy is actually this stupid. But it's possible. We'll see. Another thing that I've noticed lately is there's been this trend towards just airdropping tokens, and I know it goes back a ways. Omise Go did it a while ago, a long time ago. But I would say I remember the biggest one that I remember personally was Tron, because one day I logged into my Binance account and I saw I had 500 Tron, and I basically laughed at it, and it's worth nothing. And unfortunately, I think I went to their website and so it served the purpose of getting me to look at the project. But the fact that you felt like it was okay to give me 500 of these, made me dismiss it as there's no way anything is positive is gonna happen from this, and I'm not gonna invest any more money. Unfortunately, I didn't, because quite honestly, despite the fact that there's not a lot there, that it's pretty much vaporware, it ended up, going up some absurd percentage over the next month or two. And, as a trade, it would have been an excellent trade to get into. I did end up selling my 500 Tron for, whatever, a profit of like $150. That's fine. But anyway, that was the first airdrop that I saw. And just getting back on topic, I did recently get involved in this ontology airdrop, and that one is totally shocking to me. I also went to Neo DevCon, as you guys are probably aware. Um, and so I got a pretty decent airdrop of ontology tokens, and I'm pretty surprised at how much they're worth at this point. I'm not surprised, the value of the project seems strong, but anytime you're just giving away tokens, it's surprising to me that they can be worth what they're worth, and they reached as high as about $3, which anyone who signed up for their newsletter got 1,000 tokens. So anyone who signed up for a newsletter got 3 grand at one point if they had to cash that in. And so this new trend is somewhat bizarre to me, um, particularly because it doesn't seem to actually protect you um, from SEC regulation. So, you would think, oh, okay, we're just giving it away. They can't possibly come after us. We're not selling a security. But in fact, there have been cases brought by the SEC where where companies were giving away equities, and they thought that there was some sort of quid pro quo happening um, in exchange for these free equities. And so, according to one of these attorneys, Todd Kornfeld, who works for Pepper Hamilton, he doesn't believe that this is really a way around the SEC, and I'm not really sure it is either. So, um, sadly, we're the other trend that we're seeing in ICOs is private sales and no public sale, and just totally avoiding any potential for liability. And quite frankly, uh, as an attorney, I don't blame anyone who goes that route. Um, I think quite frankly, if you're not advising your clients that that's the way to go, you're committing malpractice. And sadly, that seems to be the reality at this point. That um, one of the things that I really liked about crypto was that it allowed me to be a VC investor. I didn't have to be an accredited investor, and I didn't have to put massive quantities of my liquid net worth into each project. I could put small amounts into multiple projects and sort of play VC without risking insane amounts of my total net worth. And so I thought this was a great positive thing to bring the opportunity. While that brings the risk, it also brings the potential for higher returns that you can't get that are very unlikely for regular investors to get in the stock market. These types of returns generally have only been captured by people who are super wealthy, who can either get in on an ICO or who can get in pre-ICO in terms of VC investing and actually investing in startups. And the fact that ICOs were allowing this to happen to regular everyday people, I thought was an excellent development for finance and for the global population and the potential for upward mobility. And it looks like regulation is going to hamper that and is hampering that. So that's a bit sad, but we are where we are, and that is the legal reality, particularly here in the United States and in most jurisdictions around the world with strong rule of law. So moving on, we had talked about this last week in our live stream, the 315 day, which is like Consumer Day in China, and they have this show. I think it's called the 315 show, where they talk about um, you know companies that violate consumer rights or take advantage of people or lie about their products or sell adulterated products, things like that. And there was some rumors going around that perhaps there would be a focus on ICOs or on cryptocurrencies and protecting the consumers in China, and that there might be new regulations announced. And we got none of that. In fact, there was nothing to speak of. So, no China FUD. That's a positive, I suppose. Although it doesn't really matter here in the U.S. And finally, the last news item of the day, the G20 is meeting next week on Monday and Tuesday. They're going to talk, among obviously many other things, they're going to talk about regulation of cryptocurrencies. And they're hoping to come up with a common response on regulation. And, you know, the documents that have been released so far suggest that the discussions will be about implications of cryptocurrencies and potential applications of blockchain, and they're trying to mitigate risk without discouraging innovation, and I think that has been, thankfully, the focus of most of these regulatory meetings, that they want to protect people without stifling innovation. And as long as we continue to go down that road, I think things will be good for cryptocurrencies and for blockchain community. But certain people have their own agendas that are going to be attending, including Secretary Mnuchin, and he's going to be focusing on money laundering, which obviously is a tiny fraction of what's happening with cryptocurrency, if at all. And it's the U.S. dollar is involved in more money laundering than any other currency around the world. So I'm not sure why, other than just being part of the old guard, that people bring that up. So that's all we have for today. I hope you all have a great weekend. We'll see you again on Monday. And if anything wild happens, we will do a live stream. In terms of a big sell-off, I'll probably hop on real quick and go through the levels I'm looking at, and hopefully be able to help you a little bit in coming up with your own plan. But please have a plan. Please have an extra strategy. Keep your stop losses on, and just don't risk everything. Be careful. Anyway, thank you so much for tuning in. If you like what you saw and you're not already a subscriber, please like this video, subscribe to the channel. You can also click that bell button for notifications of future videos and live streams. And have a great weekend. Thanks for tuning in.